Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this is for Tuesday, February 9th, 2021. So, an interesting day. We lose another chunk in GAME, GME. So what did that do? It went from nearly $500. It's lost about 90% of its value, back to $50, but still above where it started from, nicely. I think it began around 20. AMC. This was a stock that got up to, what, 1873 or so, back down to 550 right now. Reality coming back in. This is a little different here. At least they're going to be able to open movie theaters in a lot of cities, probably starting this month, late this month, and into March. I'm not sure how many people will want to go to them. I don't know what the seating arrangements will be, but people are bored being at home. You know that, so opportunity to go out, probably the right time and place. As for the markets, we dealt today with the first arguments for the impeachment trial of ex-President Trump, former president, I should say, and he lost that round, which was expected. The votes, though, were pretty much in the line that we thought they would be. There was one crossover Republican. I understand what he said. The opening arguments were terrible by the Trump team. It's that simple. I mean, I was listening to it and going, that's their opening argument? Whoa. We're looking at markets. On the other hand, and metals, a mixed bag here. PAVE sort of stalling out. And let's start with PAVE. This is that infrastructure development ETF. The market's now fighting into resistance areas. This is a big resistance area. So coming from this level, filling a gap and coming back up, okay, that was the easy money. Now it's a bit difficult. And you can see that on the chart. You're not trending. You have a lower low, higher high. You went up and you're fighting a battle right versus that 18-day average. If you drop down tomorrow, that could be it. You had an outside day down today. Now that's important. If you take out the high of an outside day down, often that's a trigger that the market wants to make a run to the closest moving average above the market. The main ones are below it, or a Bollinger Band. So I think that's an important number. When you get over it, you always need a number that if you get over it and you go, looks like it's going, and then it doesn't. I wouldn't want to see it get over it, and then I certainly would not stand for it getting back under the day's low after that occurred. I'm talking today's low, being Tuesday. When we take a look at momentum, the momentum market is not overbought. You need to be over 70 overbought. So I have bias up, I have momentum up, I don't have a swing line, I have an outside day down that might cause a battle at the 18-day average of closes. In the get high stock, cannabis is on a run, folks. I mean, a big run. It all began, if you look back right here, when the marketplace had the sideways action, narrow Bollinger Bands, and once it broke out, that was it. You had one correction back to the line in the sand, that 18-day average, and from there, it's all systems go. It's like a SpaceX. It just took off. Is it way ahead of itself? Probably. But, with this much over the upper Bollinger Band, how do you buy it? Where do you put a stop? Too difficult, but I brought it up here for a reason a couple of days ago. You now see why I brought it. I smelled, isn't that interesting? I smelled that coming. I'm being funny. Higher lows, higher highs. You can see momentum pointing up. I'm looking for the resistance, 248 and a quarter. I see the support back at 237.50. The market is in an overbought status. So I don't think you're going to get a lot of people wanting to reach for it. We know there's a shortage. I look at the bullishness of it. I told you I thought you'd have resistance at these old highs, and that's right where you're up to. So wouldn't surprise me if there's some money coming out of the market, preparing themselves. Maybe they buy it back on a break. I don't know that they'll give up everything. They'll probably take something off. In the industrial sector, this is a pretty strong move today, an outside day up. It's overbought. It's the flip-flop of what I just showed you. You don't want to see today's low taken out. If it is, I'd look for a quick retreat to the 18-day average. As long as it's not, maybe you reach for the 91.17 level. Too overbought to think, in my opinion, you're going to just pick up and run beyond that number. You don't have the momentum coming in the right spot. XLE, not a trend. You've got a lower low and then a vertical move up. I'd look for a lot of resistance here, again, an overbought market. We have a theme in the stock market of a lot of overbought markets, be it the stock indices, these individual in favor, different sectors, so you got to keep your eye on those. Overbought in the QQQ. And as you can see, lower low, higher high. This is a market that's trying to stay away from that upper Bollinger Band in an overbought condition, but it's still a market with that upside momentum. As we next look and see where we're at in the EFA, again, one of these vertical moves. And, you know, this all came off this correction that just went on us one directional. The good news is the shorts had plenty of reason and room to come out. They didn't have to get caught in any of that. Remember what we teach, at least what I teach. You hit that Bollinger Band, you want to take a chunk of your money off the table and drop that stop down or be out of all of it. I don't care which. And boom, away you go, and especially when you're oversold and not embedded. In GLD, market's fighting right at the 18-day average of closes. Now, the good news is it broke its downtrend. You now have a lower low, higher high. I don't see anything to do with it, but that's interesting to me. Gold miners now have lower highs, lower lows. It's countered because you're over the 18-day average. Should this market take out 35.49, the market would actually turn bullish. You would then have higher lows, a higher high, putting into play the 36.14 level, the upper Bollinger Band with momentum and bias your way. Right now, as it stands, because you've got the swing line down, the market sort of nullifies everything. TLT, I'll stick with the idea that, you know, this is an important zone. The market is oversold. Fed Chair Powell speaks tomorrow. I don't know if you're going to get through that or not. Long term, I told you, I'm of the opinion we're going to have creep. And that means creeping higher interest rates. You'll get corrections from time to time, but we're going up in rates, not making new lows in the immediate future. What would change my opinion, and there's always got to be something, is a variant of COVID-19 comes out that our vaccines can't cure. Barring that, I really don't see anything to change my opinion on interest rates. In FXE, where do you go after you hit this combination? Well, you went right back to that line in the sand. For this market to get and negate the downtrend, you got to take out 1404. You have momentum up, bias up, but the swing line is still down. You know, people ask me, and today I was preparing my enhanced Bollinger Band course. Now, it's important because it ties in with slow stochastics, very importantly. But one of the things that happened is I was writing the rules, and there'll be a whole set of rules that you're given in the course, was what do you do when you lose the embedded reading early on in the day or midday and you're in a problem area? How do I know? You got a 72 reading now in stochastics. You lost the bullishness. Or you had a bearish one and you're back up to the 32 level. I'm just giving you examples. Well, one of the things I often turn to are what's going on in pivot points. Why? Because they'll give you an idea of support and resistance zones, and I'm using them. If I'm long, I want to see how can I get a bounce from an area to get myself out because I think I'm in trouble at the end of the day. You don't have to sit and wait for the last tick of the day is the important thing. This is one of the tools I use, and I know I wrote it in that talking about it. How do you learn this? It's pretty simple. Number one, it's free, and I know so many people care about that. You go to our website. It's a 3-part video series. You sign up for it. We send you the links. Could it be easier? You can call my staff. They'll get it done for you as well. You don't watch it on the website. We don't want to host the links that way. So it's pretty simple. Let me see you do that. Remind people, by the way, if you like these videos that I'm doing, please hit the like on YouTube. Helps get us viewers. I'm Ira Epstein. You have a good day.